Hey everyone, it's Thursday, January 9th. This is Liam McMahon with your daily video. Thank you very much for joining me. Please read the risk disclaimer, which is now on your screen. Pause the video if necessary, and then we will go to the charts. Today we had a fairly busy day with the Bank of England European Central Bank, as well as U.S. unemployment claims, of course, previewing tomorrow's NFP Friday. So, lots to talk about. And so let's go ahead and do that. I got a request for the Australian dollar versus the US dollar, so AUDUSD. We're going to talk about long-term and short-term. The short-term perspective, short-term of being 4-hour chart to me, is actually surprisingly clear. This descending trend line starting here, this 22nd of October, then testing again here, the 19th of November. Then we got a third test up here at the 3rd of this month. All right, and then you can see it's sort of, we zoom in, it's held pretty consistently. Maybe a couple of, one actually specifically false break above, but for the most part it's held it pretty well. So for me, that's still the major level to watch. Right now, it would be really a break above 89.20 or so. Could trigger a little bit of upside. Support level is this ascending trend line here, starting back 88.20. So right now, it's about 88.60. Next major resistance above that is going to be this topside flag, whatever you want to call it, at basically 90. So that's my short term. Pressure remains on Aussie. Okay. This descending trend line held it pretty well. A lot of people have been pointing out to me that this looks like a bear flag, etc. I am somewhat less convinced. I mean, it does have the appearance of a bear flag, certainly. Sentiment is actually bearish on this pair as well. I think it's 3-to-1 longs, so that's not particularly great either if you're looking for some sort of reversal here. If you do look at the longer term charts, all right, specifically the weekly chart, first, it's worth noting we have some fairly significant RSI divergence here on the weekly chart, all right, as we near really what is a fairly significant demand area. We've had, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 out of the last 12 weeks have been red, which is very impressive. So there's something to be said for this move sort of being a little bit overcooked. And with the RSI divergence, this major supply area, I'm not quite willing to sell blindly here. So I'm watching this 4-hour chart. I'm not afraid to take a long if we get it, but right now you kind of got to pick your spots. One of the reasons that I do still like Aussie dollar long is, you look, Aussie CAD is breaking out here. All right, this right now looks like it has the potential for a cup and handle type reversal pattern. Okay, so we have this sort of rounded bottom, and now we're kind of forming the handle here. So Aussie CAD, if Aussie CAD is leading Aussie dollar, all right, it's up. We've begun. Now we just need the Aussie to play catch up. Of course, the reason Aussie CAD has been doing so well is because dollar CAD has just been on a tear higher. You can see the same thing really in Kiwi CAD as well. EURCAD, worth noting, some pretty significant resistance up here with some light RSI divergence. I tweeted this a couple times today. We'll talk about the euro in a second. This is euro dollar. Euro dollar was very annoying today. If you tried to trade it, I was fortunate to not do so. This is the 5-minute chart of euro dollar. We went up, we spiked down, and we've then rallied all the way back up. This was on the ECB press conference. Okay, the ECB left rates unchanged as expected, but they strengthened the language in their forward guidance. Draghi came out suggesting that the European Union will experience a prolonged period of low inflation before eventually, we return to that 2% target. He also said that the ECB was standing by, ready to take drastic steps if necessary, which translates most likely into a cut of the deposit rate should it come to that in the upcoming months. The euro didn't like what it saw, it sold off, and then it rallied, and the pair really remains kind of stuck. If we look here at the daily chart, the pair is pretty clearly stuck actually between the 150 EMAs. Alright, so that's 135.35 and 136. We did a round trip between those two today, so watch them for a break. I have no real bias on euro right now. I'm bearish EURCAD. I don't have a bias on euro dollar. It's too ugly. It could really easily start squeezing higher. I'm also not quite sure how I feel about euro pound. The chart of the day today was euro pound, and the one thing I know is that if we get down to 82, I would absolutely love an opportunity to buy it. The other request I had was for pound yen. Let's take a look at pound yen. If we look at the 4-hour chart, I did a daily FX guest analysis on this pair back here on about 4 days ago, on the 5th, or maybe the 6th. Talking about how this 100 period EMA here on the 4-hour chart has been very strong lately. You can see the first bounce here, very strong bounce here, 2 bounces off of it here, and we continue to push higher. I am moderately bullish pound yen, looking for 174 and then 176. What will flip me on this pair, okay, is if this ascending channel finally breaks, especially if we do manage to get below 172 and this 50 period EMA, which has been pretty decent resistance as well. Alright, so that's how I feel about pound yen. It is the only yen pair that I feel really confident about being bullish on. The rest of them look a little bit dicey. Dollar yen, alright, looks just kind of sloppy here. Major support about 104.25, major resistance 105.43. Euro yen looks nothing more than a giant head and shoulders in the making. Which, I mean, considering the rally we've seen, the head and shoulders would have to be giant for it really to have any significance. There's your neckline, really below 141.70, 140.41.60 or so. Could trigger a fairly aggressive sell-off here on euro yen. So that's definitely one that you want to keep your eye on. Going into NFPs especially, I don't particularly think you want to be initiating positions tomorrow morning. But certainly after NFPs, if we do see a bearish yen pair reaction, okay, euro yen may be one to sort of stick on and ride, alright, if we do eventually get a reversal. If that's going to happen, we're going to see the Nikkei need to break down below its support. It has major support at 15.8. Okay, that is a retest, an ascending, and basically this 200 period EMA here on the 4-hour chart, which you can see here and here, has been significant lately. Alright, so watch the Nikkei as well. Kiwi dollar has a buy upcoming. If we dip, we do manage to reach basically 82.05, 82. It's a 6.8% fib. It's a retest of this descending trend line dating back from the 22nd of October. Alright, so those are the levels that I will be keeping an eye on. Going into tomorrow's NFP report, pound dollar, very similar trend line here as well. It's not that clear. There's also the potential, I suppose, for a pound dollar head and shoulders being formed around the right shoulder or so now. So that's another one to sort of keep your eye on. This one probably not so much tomorrow, but over the next coming weeks and months. Real quick, we'll do E-minis. E-minis are just sideways chopping here. Alright, the longer that we continue to go sideways here at the beginning of the year and stay above basically this 18-17 pivot is the better that this market looks to me. The more primed it looks for new highs. I do think that we will see a fairly significant equities sell-off sometime in 2014, but I'm in no rush to front run it. I'll wait and see. Certainly first support 1817 down to about 1800. That range is highly supportive. If we get below there, then we'll talk about possibilities for downside. Alright, so I hope that's helpful. Good luck trading tomorrow. As always, you can find me on Twitter at Duke0777, at GlobalFXClub, or at GlobalFXClub.com. Thank you very much for listening and watching, and I hope you have an absolutely terrific Friday and even better weekend.